I think the operating performance of the company is going to be front and center, in addition to some of the more strategic things that you brought up earlier. So the subscriber landscape, essentially the pace of traditional declines in subscribers for traditional distributors, as well as the growth of virtual MVPDs, things like Sling or DirecTV Now. That's going to be front and center because ESPN still generates about $5 billion of its $17 billion of EBITDA from ESPN, a traditional pay TV service. So yes, advertising and pay TV subscriber growth are going to be a part of the call. That being said, we are going to talk about the Fox transaction. When does it close? Does it close? What's the pace of us getting Chinese approval for that deal, as well as looking forward into the direct-to-consumer potential launches. You mentioned the Disney, perhaps it's called Disney Play, that should launch in the back half of 2019, as well as ESPN Plus, which is already out there today.
All right, so Brett, as we talk about these strategic initiatives, they're not huge revenue generators yet, but it is the future. We're learning today that Comcast, our parent company here, might start its own over-the-top type service. How much are we going to scrutinize the traffic or subscriber numbers here? And is Hulu a big deal given the Disney-Fox assets acquisition? Because now they're going to own 2/3 of it almost by the time it's done.
Right. So first on the direct-to-consumer products, it's probably too early to really start talking about subscribers. They really just launched ESPN Plus, and the consumer product or the entertainment product that they expect to launch won't be launched until the end of 2019. They need to close the Fox deal before they can even put that product together and start marketing it. So it is a little bit too early to talk about the subscribers associated with that. That being said, the costs associated with launching those will be front and center because they are going to be, the costs associated with launching these two products are going to be a drag somewhat on 2019 EBITDA. So I do expect that to come up on the call. And then on the Hulu side, Hulu definitely does matter. They'll own 60% of it. What happens after they close on the Fox deal? Uncertain. I don't think Comcast wants to give up their stake in Hulu at this point. But again, that will be a focus on the call.
Netflix plans to spend $8 billion on content. I mean, how much competitive pressure is this putting on companies like Disney to ramp up the content game?
There's a tremendous amount of competition in the video space, right? You have all of the over-the-top incumbents like Netflix, like Amazon, spending, as you mentioned, $8 billion for Netflix, something like $6 billion for Amazon. There have been 30 different over-the-top services launched in the last 3 years. So the video marketplace is much, much more competitive than it used to be. And traditional linear entertainment channels have followed suit. The number of scripted originals that are launched, that are broadcast every year, has gone from something like 250 to 500 over the last 5 years. So yes, the landscape is getting much, much more competitive, really because it's much easier for entrants to access the market. 10 years ago, if you wanted to start a traditional cable channel, it'd be very difficult. You'd have to convince all the distributors to carry you. Now, all you need to do is have access to the internet, which is everybody can get, which is why we've seen such a large growth of these entrants.